Imagine waking up to a financial landscape that's just been reshaped overnight: stricter rules, broader oversight, and penalties that could hit hard if you're not compliant. That's the reality for anyone in the UAE's financial sector following the UAE Central Bank's game-changing new law. But here's where it gets intriguing. Is this the protective shield the industry needs, or a potential barrier to innovation? Let's dive in and unpack it all step by step, making sure even newcomers can follow along. UAE Central Bank unveils groundbreaking central bank law to streamline financial sector oversight. Client alert, November 13, 2025. In this update, we'll explore the key changes brought about by the new Central Bank of the UAE law, along with their potential impacts on businesses in the UAE's financial world. On September 15, 2025, Federal Decree Law No. 6 of 2025 concerning the central bank's oversight of financial institutions, activities, and insurance, often called the new CBUAE law, was published in the Official Gazette. It took effect just a day later, on September 16, 2025, as outlined in Article 188. This new law completely replaces two previous ones: Federal Decree Law No. 14 of 2018, which once regulated the Central Bank of the UAE and local financial firms, and Federal Decree Law No. 48 of 2023, which handled insurance matters. The new CBUAE law is a major revamp of the UAE's financial rules, bringing together the regulation of banks, payment providers, and insurance companies under one roof. It also sets up new licensing for tech-driven players and ramps up penalties and enforcement powers. Below, we'll break down the most important changes in the new CBUAE law and what they mean for UAE-based financial organizations. Tough new criminal penalties for operating without a license. Under the old 2018 law, it was illegal to perform financial activities without proper approval from the CBUAE, but there were no real punishments attached. The new law fixes that, aligning with practices in other countries where doing so is treated as a crime. Article 60 restates the rule that only approved individuals or companies with the right licenses, based on the law, its rules, and decisions, can carry out or offer these activities in the UAE. The big shift comes in Article 170, which makes unlicensed financial work a criminal offense. Without affecting other penalties, Article 168 lets the CBUAE hand out administrative fines and sanctions for unlicensed operations. Specifically, Article 170 brings in jail time and fines ranging from AED 50,000 to AED 500 million for those caught engaging in licensed activities without permission. A huge jump from the old law's limits. This could lead to more aggressive crackdowns. And this is the part most people miss. It shows the UAE's growing focus on deterring risky, unauthorized financial dealings. These rules cover everyone, including firms outside the UAE, and those in special financial zones like the Dubai International Finance Center and Abu Dhabi Global Market. Any business targeting UAE shoppers, even if approved by a zone's regulator, might still face federal penalties. According to Federal Decree Law No. 8 of 2004, these zones follow all federal laws, except for civil and commercial ones, and the new CBUAE law wins out in any disagreements. But here's where it gets controversial. Does this broad reach unfairly target international firms just trying to connect with UAE customers, potentially chilling global fintech growth? Or is it a smart way to protect local consumers from unregulated risks? We'll touch on this debate later. Clear ban on unauthorized promotions widens CBUAE's watchful eye. The new CBUAE law adds fresh rules, including a direct ban on promoting or communicating about licensed financial services without the right permissions. This is a huge expansion, pulling in marketing and ads aimed at UAE residents into the regulatory net. Thanks to Article 61(1)(h), advertising, marketing, or promoting a financial activity that needs a license is now considered a licensed activity itself. So, anyone doing that must have CB/UAE approval. Article 60(3) backs this up by saying such services and products can only be offered or done in the UAE following the law and its rules. Communication is defined widely here, including phone calls, faxes, emails, internet, or mobile texts, plus any invites to start financial deals. Because of this broad view, the law covers not just actions inside the UAE, but also messages from abroad to people here. Unlicensed overseas companies promoting products or services to UAE folks via websites or digital channels now risk violating the new law. Foreign operators should check if their online or remote outreach counts as a licensed activity in the UAE, and if they need local approval. Regulatory net casts wider over virtual assets and decentralized finance. Another brand new addition is Article 62, which stretches the CB/UAE's oversight to include activities using new tech, like virtual assets, think cryptocurrencies, and decentralized finance, DeFi, systems where financial services run on blockchain without central control, allowing peer-to-peer transactions without banks. Article 62 broadens licensing by stating that anyone who participates in, offers, issues, or helps with a licensed financial activity, through any method or platform, falls under CB/UAE's licensing, rules, and supervision. Crucially, this isn't just about stopping unlicensed operations, it directly targets facilitation, whether direct or indirect. This means companies offering tech support, platforms, or tools that enable financial services could be regulated, even if they are not selling the services themselves. By focusing on facilitation, the law stops firms from dodging rules by calling themselves just tech providers. Ahead, tech firms, payment handlers, and DeFi players will need to assess if their models support regulated activities, possibly requiring a license. For beginners, think of DeFi as a way to lend or borrow money online without a bank. Exciting for innovation, but now tightly watched. And this is the part most people miss. Could this stifle the creativity that's booming in tech finance? Or is it essential to prevent scams and crashes in a wild new world? Strengthen duties for licensed financial institutions. The new CB/UAE law creates a unified system of careful oversight, ethical standards, and customer safeguards for all licensed financial institutions, LFIs. Articles 114 and 130 require LFIs to follow all CB/UAE rules, standards, and guidelines, covering things like enough capital reserves, cash flow, management structures, risk handling, and dealings with related parties. The CB/UAE can set detailed rules for board members and top execs, boosting responsibility. The law emphasizes that the CB/UAE can take any steps needed to keep LFIs running smoothly. On the ethical front, Articles 148 to 152 bring in a customer-focused regime, mandating independent complaint handling, clear product info, fraud prevention, and efforts to educate and include more people in finance. Articles 183 and 184 ensure that during the switchover, old rules from the 2018 law stay in place until new ones arrive, keeping things stable. See transitional rules and ongoing stability below. Advanced system for handling troubled institutions. Articles 142 to 146 introduce a thorough plan for resolving and recovering failing LFIs and insurers, bringing the UAE up to global standards for financial safety and risk control. Here, the CB/UAE can step in early for struggling firms, apply fixes, and start resolution with a new settlement and resolution authority. Tools include swapping managers, fixing capital, or transferring assets and debts to keep key services going and shield depositors and policyholders. Article 144 sets creditor priorities and loss sharing, while